Hey, I'm Alex and welcome to the channel. So today I want to talk to you about a tech stock that I think you should be looking at. It has really strong growth prospects, it has really solid fundamentals, and it is a company that's going to play an increasingly important role across every industry in the years to come. Now, Warren Buffett once said, "The best business is a royalty on the growth of others, requiring little capital itself." And that's exactly what this business is. The company's called Atlassian and is listed on the NASDAQ. What they do is they produce software for software developers. And at the time of writing, the company had a market cap of around 43 billion. And as part of this video, I'm going to take a detailed look at this company. And the research that's gone into this has taken a lot of time. If you find it interesting, if you find it useful, please hit like on the video. It's massively appreciated. If you're interested in this sort of content, please subscribe to the channel. All support shown is massively appreciated and really helps motivate me into making more content like this. So let's get straight into it. So Atlassian has three core products. Those are Jira, Confluence, and Trello. Jira is a team planning and project management software. Confluence is focused around content collaboration. And what's so interesting about this business is that their products are used across so many teams within each organisation, and they're all focused on driving collaboration and efficiency. Interestingly, 2/3 of the Fortune 500 companies use Atlassian products. Now, all these softwares are mission critical for their customers. And by mission critical, what I mean is that without those software, they would not be able to operate in the same way. When you boil it down, that ultimately means when you win a customer, they stay a customer. And that's underpinned by the customer churn which Atlassian has. Their customer churn is around 2%. And what this ultimately means is that of the customers you have in, say, 2018, 98% of those customers go on to continue to be customers in 2019. Now you might be thinking, well, why have they lost that 2%? Well, that could be a result of the company having been acquired by another company. It could be that they've gone bankrupt, or it could be that they have switched to an alternative. But let me tell you, 2% is a great benchmark here. And we should like businesses with mission critical products because the customers are sticky, they're very loyal, and ultimately, any moving away from our product will be massively disruptive to their business. Furthermore, the value proposition which Atlassian has for its customers is very clear, as you can see from this chart. The more time a customer spends with Atlassian, the more products of theirs they use. Now, this really shows how much customers value their products. Now, another thing that's great about Atlassian is their sales model. It's all optimized for self-service. What that means is you don't need massive sales teams. You don't need lengthy implementation periods. And it's quite simple to win customers by letting them trial your products for free and proving their worth to the organization. And that's exactly what Atlassian does. So now let's take a look at the market that Atlassian operates in. Now, one thing we've seen from this health crisis and social restriction measures that have been put in place is that there have been two key trends that have come out from this: an increase in collaboration and also an increase in the acceleration of technology. Now, both of those play very strongly into Atlassian's favour. With many people being required to work remotely, collaboration has become increasingly important, and that's exactly what Atlassian's products are about. And this isn't going to change. And secondly, the acceleration of technology. Now, companies have been forced to adopt technologies in new ways and to take a more forward-looking perspective on these things. Again, that's so important to Atlassian, and ultimately, this is driving the growth in the market which Atlassian operates in, across all sectors. The market's also very large, and as you can see from this chart, Atlassian only addresses a very small portion of this market currently. So there's great opportunity to grow within the market as well as with the market growing itself. Now let's take a look at the financials. Let's start off with the revenues or the sales. Atlassian's had great growth there historically, with the revenue growth more than 40% over the past 3 years. And that's been achieved from both new customer wins and from upsell to existing customers. Now, this gives me great confidence when trying to understand how the business will perform in a downturn. Say new business isn't won, but actually you can have confidence you can still grow the revenues by upselling additional products to your customers where your value proposition has been proven to them. The revenues are also highly recurring, and there's a great degree of visibility over those revenues, and that's something I really like and is important. And as I highlighted in another video, where I put the link in the description below, that is so important to making sure that you outperform the stock market in the long run. So those are characteristics I always look for. The company's also posted consistent gross profit margins. And looking down the other main cost items, the main item is R&D, research and development. And whilst this is important to ensure that the product remains relevant, it is something that if the company were to face financial difficulties, could be switched off and the company would become very cash generative. The same for marketing expenses. Historically, the company's been growing these cost line items as they hire more people to focus on these areas. As the company continues to grow, it will become more profitable and more cash generative. The company also generates a lot of cash. It has good free cash flow generation. It has low capital expenditures, and it has a great working capital cycle too. Now, for those who are less familiar with this, I'll touch on that very quickly. The key things I'm looking at here are the payables days and the receivables days, i.e. the number of days it takes for us to receive money from our customers and the number of days it takes us to pay the people we owe money to. In this case, We receive money from customers very quickly and we take longer to pay our suppliers. That's a great cash position to be in and shows effective working capital management. The company also has a really strong balance sheet. Now, I'm not going to get bogged down into too many of the ratios that a lot of people look at, and especially in this business because it's so asset light, a lot of them don't actually really make sense. For me, the key ones I'm looking at here are the cash balance. It's growing, it's a large number, and we have liquidity. I then quickly check that against the current portion of the debt due, ensuring that can easily be covered. Other key things worth noting are the deferred revenue line. Now, the deferred revenue line or deferred income is actually money which has been received from a customer in relation to a service where they've paid up front, i.e. a customer has paid for a year, but actually we've only provided them 6 months of that service. 6 months of that revenue will be in that deferred income or deferred revenue line. And obviously that deferred revenue, deferred income line is growing, but that makes sense given the model. Now I'm going to focus on the risks. Now, as a quick aside, I could do a whole video on how I find it really frustrating. I see a lot of other people making videos on companies you should think about investing into, but they never address the risks. As investors, we need to thoroughly understand those risks to be able to make a good investment decision. We're not gambling after all. If you do not spend time understanding and considering the risks, you're a bad investor. There's a reason that at every hedge fund and every private equity fund, before any investment is made, there's many meetings where the most experienced investors discuss for many hours the key risks of the business. That should highlight how important it is that we as investors should also be doing the same. Now, for me, the key risks are, firstly, valuation. Now, it trades above its peers on a PE and a PEG basis. Here, the real risk is actually the valuation falls, it never recovers, and we don't make a return because of that. Secondly, there's a tech risk. There's the risk that somebody else comes into the market and disrupts it with a superior product. Now, I think that's slightly mitigated by the fact that Atlassian has really sticky relationships with its customers, and it has an almost cult-like following amongst many of its users. And another risk we really need to consider is the business model risk. The risk that the business doesn't grow the top line as we expect, whether that's not winning new customers or not upselling to existing customers in the same way, and the company fails to ever become profitable. Now, for me, the main reasons why I like this are as follows. It's mission critical, it's got sticky customers, great revenue visibility, and highly recurring revenues. It's well positioned as a market leader in a really high growth market, underpinned by strong tailwinds, and where the product is viewed as best in class, and this is a key differentiator. It has a really simple and proven growth strategy. Land and expand. Win a customer by proving the value proposition, and then expand across multiple products with that customer. And finally, it's highly cash generative, and as it scales up, it will become more and more profitable. Whenever I make an investment, I always build a financial model. In that model, I stress test and sensitize the different operating assumptions behind the business model to get a feel for what that would do for the valuation, what that would do for the share price. If this is something people would be interested in seeing, please let me know in the comment section below. Maybe I could do a video showing how I create these and could share the template so you could use the similar ones as well. I see so many people on YouTube trying to sell these models. Don't buy them, they're super simple to make, and often the ones you buy will have loads of mistakes in them. Save yourself the money and learn how to do it, and ultimately it will make you a better investor. The final thing on Atlassian is recently a stock analyst at Citi started their coverage of the company and put an estimated buy price of around $252 on the business. So thank you so much for watching. If you found it interesting, please like the video, please subscribe to the channel, and let me know in the comment section what your thoughts are, whether you agree, whether you disagree, and whether you hold the stock or not. But thanks again, and I'll see you in another video.